Welcome to the channel Finance and Investing for All. Now, if you are new here, please click the subscribe button. Also, comment below and let me know what are the topics you would like me to cover. Today's question is for you savers out there. The question is, how much of your funds do you keep in a bank account? The answer should be absolutely next to nothing. Now, banks do serve a very important purpose. However, for the purpose of growing your wealth or your savings, I would highly advise against using a bank. Now, I highly support the fact that everybody should actually open up a bank account. Yes, I even agree that to a certain extent, banks are a safe place to store funds. Well, here is the question. Why do so many of us think that banks are the best place where we can grow our wealth? Well, for one thing, we've been told so. And yes, I do agree that this notion did hold true, let's say 30 to 35 years back. In this day and age, it doesn't. Also, we need to be aware of something known as inflation. We've also been told that banks offer near risk-free products and services. Now, while that is true to a certain extent, keep one thing in mind. If you want to achieve your financial goals, if you want to achieve financial freedom, you need to change your mindset from that of savings into investing. In other words, you need to move away from banks.
We have in front of us a graph which outlines the rate of return on certificate of deposits. For good measure, I've even added the inflation rates, covering a period from 1988 all the way up to 2017. In the earlier years, without much effort, a person could easily beat inflation. However, post-2009, this has become increasingly difficult to do so. Also, keep one thing in mind. In order to actually realize the rates of return on today's CDs, one has to invest a sizable amount with banks. What I've done here is include the rate of return on the S&P 500 for the very same period. Now, that certainly looks scary. Look at the level of volatility and fluctuation. Look at what happened between the years 2000 and 2002. That was the internet bubble which burst. Then look at the period of 2007 up to 2009, and that was the financial crash. The volatility seen in this graph itself is a reason why savers shy away from the stock market. Now, same period of coverage and same rate of return. If you had $100,000 and did absolutely nothing with it, what you'd end up with is $46,616 in 2017. In other words, your funds would be eroded by inflation over time. If you invested those funds in certificate of deposits, what you'd end up with is $300,000. Well, that's not bad. However, if you did nothing but invest $100,000 in the stock market, despite all those zigzag fluctuations which I just showed you previously, you would end up with $2.1 million. Yes, costs have not been included in the rate of return. However, this graph itself outlines that despite all the fluctuation in the last 29 or 30 years, your return would have been significantly greater if all you had to do was just keep your funds in the stock market and do nothing else. Now, let's assume for a second you had to invest in the market 1 year prior to the great financial crash. Now, if you did absolutely nothing, inflation would have eroded your $100,000 into $81,900. If, however, you decided to invest in certificate of deposits, you'd end up with $116,000. It's not bad. However, despite the significant crash, where your 100,000 would have crashed down to $66,000, you would still be far better off at $238,000. The point I want to drive here is that if you have the financial discipline and patience to stay invested in the market over a long-term period, then your returns are going to be far greater than any other low-risk product offered by any bank out there.
With this video, I hope I've been able to convince most of you out there to move away from banks and into products and services that enable you to meet your financial goals. Now, if you are new to this channel, please click the subscribe button. Also, comment below and let me know what are the topics you would like me to cover. Till then, see you soon.